Welcome back to the channel. Today, we are diving into one of the hottest stocks in the quantum computing space, D-Wave Quantum Incorporated, ticker symbol QBTS. This stock has seen a massive surge recently, and we are going to break down what is happening, why the market is reacting so strongly, and whether it is a good investment opportunity. Stick around as we cover the company's latest breakthrough, its financials, and the risks you need to know before making any moves. So why did D-Wave stock jump almost 47% in a single day? The company announced that it achieved quantum supremacy, meaning its quantum computer solved a problem that even the world's most powerful classical supercomputers would take millions of years to complete. D-Wave's Advantage2 system performed a complex magnetic material simulation in just 20 minutes, a problem that classical computing simply could not handle efficiently. And this is not just marketing hype. Their results were peer-reviewed and published in the prestigious journal Science, adding major credibility to their claim. Investors saw this as a significant step toward real-world quantum computing applications, driving demand for the stock. The key takeaway here is that this milestone could push D-Wave into a leadership position in the industry, potentially leading to more enterprise adoption and government contracts. The information provided in this video is for educational and informational purposes only and should not be considered financial or investment advice. Investing in the stock market involves risk, including the potential loss of principal. Always do your own research and consult with a financial advisor before making any investment decisions. Investments in stocks and other securities carry risks, and past performance is not indicative of future results. For those unfamiliar, D-Wave Quantum Incorporated is a leading quantum computing company focused on quantum annealing, a specialized approach designed to solve optimization problems. While companies like Google and IBM focus on gate-based quantum computing, D-Wave's technology is already commercially available and being used in real-world applications. This is why D-Wave stands out. It is not just a research project, it is a company that is actively selling quantum computing solutions today. D-Wave provides commercially available quantum computing solutions that are already being used in real-world applications. Their Leap Cloud service gives users direct access to quantum computing, while Advantage is designed for enterprise and research applications. The Ocean software suite helps developers build and optimize quantum applications, and their work in quantum AI integrates artificial intelligence with quantum computing for advanced problem-solving. In addition to these products, D-Wave offers professional services and training programs to help businesses integrate quantum computing into their operations. Unlike many competitors still in experimental stages, D-Wave has real commercial applications today, positioning itself as a leader in the industry. Now, let us talk numbers. D-Wave stock closed at $10, up a staggering 47% in a single day. Its 52-week range is between $1 and $11. So this stock has been highly volatile. Despite the stock jump, their latest earnings report was mixed. Revenue came in at $2.3 million, beating expectations of $2.2 million. However, they missed on earnings per share, reporting a loss of 8 cents per share instead of the expected 6-cent loss. The company is still in a growth phase and is not profitable yet. One of the biggest concerns about D-Wave is valuation. Its price-to-sales ratio is a sky-high 148, compared to the industry average of 9. That means investors are paying a premium for future growth expectations. If D-Wave can continue delivering real-world quantum computing applications, this valuation might be justifiable. But if they struggle to scale revenue, the stock could see a correction. Despite valuation concerns, analysts are bullish on the stock. 6 analysts currently rate QBTS as a strong buy, but interestingly, their 12-month price target is $9, which is actually lower than the current price. This suggests analysts expect short-term volatility. In terms of earnings and revenue growth, we see mixed signals. Earnings per share improved by 17% quarter over quarter, but revenue declined 21% year over year, which is not great. However, revenue did bounce back with 23% quarterly growth, showing signs of a recovery. Looking ahead, D-Wave is projecting aggressive growth. Earnings per share is expected to grow 65% year over year in 2025. while revenue is forecasted to surge 326% year over year. If these projections hold up, D-Wave's premium valuation may be justified. Historically, D-Wave has struggled with profitability. While net profit grew 10% year over year, it is still far below its competitors. In fact, its 3-year net profit growth is down 2,585%, which is a major red flag. Now, let us talk risks. D-Wave is a highly speculative stock, as it is still unprofitable and burning cash. The stock price swings wildly based on news, making it extremely volatile. The high price-to-sales ratio means the stock is priced for perfection, which could be risky if the company fails to meet expectations. Other quantum companies could outperform, making it a highly competitive market. Investors should be aware that while the upside is exciting, the risks are just as high. So, what is the bottom line? D-Wave's Quantum Supremacy milestone is a big deal, and the stock has surged in response. However, it remains a high-risk, high-reward investment. If you are a long-term believer in quantum computing, this could be an interesting speculative play. But if you are risk-averse, you might want to wait for more stable financials and revenue growth before jumping in. That is it for today's breakdown of D-Wave Quantum. Let me know in the comments. Do you think D-Wave is the real deal, or is this just another hype-driven stock? Do not forget to like, subscribe, and hit that notification bell for more in-depth stock analysis. Thanks for watching, and I will see you next time.